Ladies and gents, for those of you who haven't yet made your way into the venue, please could you make your way in and be seated. Thank you. Good evening, ladies and gentlemen, and welcome to our Northstar event. Last time we had an in-person event was back in 2019, and we are pleased to see many familiar faces, as well as many new faces in the audience this evening. We hope to provide you with some great takeaways from the evening and look forward to continuing our journey with you in the years to come. We would like to thank Taryn Rubenstein, who is here tonight representing the Children's Hospital Trust, an MPO chosen by Mayor Geordin Hill-Lewis, to whom Northstar has made a donation this evening in support of the orthopedic unit. I now hand over to Adrian Clayton, CEO of Northstar Asset Management, and Hlelo Giyose, CIO of First Avenue Investment Management. Adrian will touch on what makes tonight so important to us, after which he and Hlelo will shed light on 2 threats as well as 2 opportunities currently available in the market.
Good evening, ladies and gentlemen. Can everyone hear me in the back? It's fantastic to have everyone present. We are most grateful that you came out this evening. It's a beautiful night. At least we don't have rain as we have for the last 3 weeks. Tonight, I'm really just going to touch on a few themes quickly before I get on to opportunities and threats with Hlelo, and just give you an idea of what we are celebrating. In 2019, we had Helen Zille here, and that was our last event pre-COVID, and she spoke on Closer to the Truth, which is effectively Northstar's phrase that we use and all our marketing material. And hopefully you'll see that tonight we're getting closer to the truth in terms of our own journey. So it's 27 years of existence that Northstar's been around. Started in 1996 by Alexander Otten. And to put that into perspective, Coronation started in 1993 and Investec Asset Management in 1991. So right there at that moment, that important period in the South African financial services industry, Alexander decided to start an asset management business. As most of us in this audience know and have supported Northstar for many years, Alexander passed tragically in 2012, and along came the rest of us to take over the business. And it's been quite a transformation, we hope, over this time, over the 10 years. And that's really what we're celebrating tonight, those 10 years. So a little bit about that journey. The business started as a pure private client asset management company, just with share portfolios, offering only South African investments, no overseas investments. There was about 500 million rands worth of assets under management at the time when I was speaking to Alexander. And there were 2 staff members. And as I mentioned, 1 product. We take 10 years forward between ourselves and First Avenue, and I'll speak about First Avenue just now. We have 9 billion of assets under management. We have 3 specialist investment teams, an SA equity team, a global team, and a fixed income team. We have 25 staff members, 4 unit trusts in South Africa and 2 global unit trusts. And 50% of our asset base is outside South Africa, and we exported most of that capital for the people sitting in this audience. Just some latest developments in the business. Firstly, First Avenue. Hlelo sitting right here, a friend of mine. Hlelo is basically the principal of First Avenue Investment Managers. Started that business in 2010. Studied in London and the US, and held senior positions at HSBC, Investec, Stanlib, and the IDC. So a very experienced investment professional. With him is his partner, George Haynes, who's the chief operating officer of that business, and they've worked together for many years. So we saw an opportunity to partner with First Avenue. They cover a different market to us, the institutional market. Ours is the retail market, as you can see. Most people, high net worth individuals and advisors. And Hlelo, of course, deals mainly with pension funds in that area of the financial services supply chain. So what is the benefit of working together? A larger investment team. We have 12 investment professionals. We can cover more companies, economies of scale, reduce costs in terms of for clients and dealing with suppliers, and most importantly, also friendships in this industry, which are required. The second development is on the board you'll see that we've launched a new fund, Northstar Global Income Fund in dollars. So offshore investment, income fund, opportunities in markets have changed over the last year or two, allowing income funds to be created and run globally. They weren't exactly an in vogue asset class because there wasn't enough yield offshore. Now yields are much higher and you can get good yields in dollars. So we've launched an offshore fund. We know our clients want to be offshore for many reasons we'll discuss tonight. And we think it's appropriate that product is available for our client base. Just in terms of highlights in this business over 10 years, I can promise you there have been lows. It's a tough business to run and build. But some highlights, I'm just going to really mention two. There have been many highlights, but we've been the runner-up for the Raging Bull Award for our global fund for 3 years in a row. CityWire rated us one of the top 4 income managers in South Africa for our income fund. And as I mentioned, we're launching a similar product offshore. So those are just 2 points worth noting. We do see ourselves as deeply embedded in the offshore space, and we think our business will grow in that area more so than it probably will in South Africa in the years ahead. Some thank yous. Firstly, and most importantly, the many clients in this audience that stood by us in 2012 when we bought over this business. It was a tough time to take over a company, and we had huge support from many, many people in this audience, and I'm not going to go through the names. You know exactly who you are. I've said hello to a lot of you tonight. Then some early supporting financial advisors, of which a business like ours cannot survive in an industry without them. And that includes Steve Eichen from Fin Planning, Ian Beer that I saw earlier on from Netto and his business, Clark Ellis, Solutions to Wealth. Clark is unfortunately unwell. I saw him today. And then Greg Snedden, the financial coach. Just some examples of big supporters and prominent personalities in the industry. Then our staff, our suppliers, some of which are in the audience as well, our shareholders, and of course, let's not forget our families. I think it's long-suffering wives and husbands if you decide to marry an asset manager. Then I haven't seen Igor tonight, but I have seen Liz Hacking. The lawyers that actually, when we bought the business in 2012, encouraged us to purchase Northstar and have been highly supportive over all the years. And then I don't think I should forget the 2 ladies that arranged tonight. And they're both very nervous, do not want to be seen. But we've got some flowers for them. They don't want to come up. But it's really Lindsay Burta, our marketing manager, and Tanisha Graham, who heads up our office, have made sure that tonight happens the way it has. And I hope it unfolds well. Then I just think I should, and Ludi's really going to be responsible for this, but thank the mayor for being here tonight. We're looking forward to the speech. I've heard numerous people asking questions, but I think we only got probably 2 or 3 that they're allowed to ask you tonight because you're busy, but you're a popular hit. That's all I can say in Cape Town. So thanks for being here. I think, Ludi, I go straight on to my presentation. All right. So tonight, Lo and I are going to cover some topics. And I've got to keep the speed up. So there's a timer, wherever that is. Timer's there. All right. And I'm going to discuss 2 points. The one is demographics and the aging global population. And I had a few chats to people in the audience around all of us getting a bit older. And the second is electricity. Those are both the opportunities and the threats. And then Lo will deal specifically with investment opportunities relating to those 2 topics. Just got to make sure I use this properly. All right, so the world's population is doing some interesting things. Firstly, it is growing. But it's growing at a slower rate than it did in the 1970s. So what we got up here is 2 graphs. The orange graph is the growth rate, and you'll see it's dropping off. And the blue line is the growth in population numbers. We've hit 8 billion at the moment of us that walk this planet. Between 1950 and 1987, the world's population grew from 2.5 billion to 5 billion, which is 37 years. And from 1987 projected to 2059, it's expected to double again, 5 billion to 10 billion. But that's 72 years. So it's slowing down in terms of that growth. The world's population is expected to shrink from 2100 onwards. And that'll be the first time that actually happens on this planet since 1346 with the Black Death. I find the Black Death interesting because it happened and it took 80 years for the population to get back on board. So there's a big death rate at that period. In 2000, the fertility rate globally was 2.7 births per lady, per woman. In 2023, that's 2.3 births per woman. To keep the world stable, it has to be 2.1 births. So what's interesting is the first 15 largest economies on Earth, in terms of GDP, have already gone backwards in terms of replacement levels from the perspective of their population. So they've already passed that 2.1. And that includes the US, China, and India. China's birth rate in 1970 was 6. In 1991, it was 2.1. So where is the population growing? Believe it or not, it's right here. So the Southern African population is 1.152 billion. By 2040, it's expected to be 2 billion. More than half the world's future population growth comes from Southern Africa between 2022 and 2050. But the world's also aging, and that's the interesting thing. By the year 2050, there'll be 2 times more 65-year-olds than 5-year-olds. Pro-family policies are not working in Singapore, in China, everywhere. China's National Bureau of Statistics announced that 850,000 people died last year. And the UN predicts that China's population will halve by the year 2100, from 1.4 to 700 million people. So why does this count? Well, less people, less tax receipts, less pension support, lower GDP growth, and less fluid intelligence. Now, that might sound like a big insult to most of us in this audience because I'm over 50, but fluid intelligence is that young people provide more patents, solve more problems than us older people. And with less of them around, that's a problem for the world. So what actually is happening? Well, it's called the demographic transition, and I'm not going to go through it in any detail, but initially, there's a high birth rate and death rate in an agrarian society. Then medical science takes hold, and you tend to find that birth rates continue to be high, but the death rate reduces. Later on through the cycle, what tends to happen is people get a bit richer and they don't want to have as many babies, so that the birth rate also starts to drop. At the very end of the cycle, people age, they don't want to have a lot of babies, and you actually have declines in population. That's stage 5. But what's important is through stage 1, 2, and 3, there's an explosion in population. And that's really what's happening in certain parts of the world until recently. Why that counts is because emerging markets are still growing. They're going to become more important than developed markets. The rich consume different products to the poor. And savers and dissavers count. So if you look at the world, China's a saver, Japan's a saver, the Nordic countries are savers, the oil exporters are savers. I think I mentioned Japan. The US is a dissaver. The Southern European countries are dissavers, and a lot of emerging markets are dissavers. What that means is when your population's aging, they don't have the money to look after themselves at some point. So the savers will become more powerful relative to the dissavers. Interesting that Ethiopia has 120 million people. That's expected to be 300 million by the year 2100. But there's one common theme that all of us, no matter what country and where you are in the demographic transition, is consistent. More healthcare is required as you age. So some countries, people travel more when they get old. Others, they go to movies. The one thing is for sure, they all use more medical products. And that'll be a theme that Hlelo will discuss. So the world's going to face a shortage of workers. And that's a big issue. So Nigeria is growing its workforce from 100 million to 352 million over the next 50 years. And while the rest of the world's population is kind of peaking in 2050, Africa's growing. In 1980, Africa's birth rate was 6.6 kids per woman. In 2023, it remains at 4.2. So what you're going to need to see to cover this problem with a lack of workers in some area, you're going to have to see migration. The problem is some countries don't allow migration. In China, only 0.2% of workers are foreign. So why is this a huge issue? What we show here on this slide is USA GDP growth over different decades. And to grow your GDP, you need two things. You need more production from each person, and you need more people. That's how GDP grows. The problem is that populations are shrinking, and productivity is really at quite high points. So unless you allow for immigration, you're going to see slower growth in a lot of these economies. So while demographic transition is certainly a threat to a few economies, one of the good points is that it's growing the middle class. So there's a sweet spot between probably stage 3 and stage 4, where the population gets extremely rich. And at this point, you see consumption of more expensive products. So luxury goods, cars, obviously more medical products too. In the early stages, people want food and shelter and education. And if we look in the medium term, China, for example, in 2010 had 150 million middle-class people. In 2018, it's 707 million. Chinese urbanization in 1980 was 19%. In 2011, it's 50%. And in 2022, 65%. This is a common theme amongst most emerging economies. And what it tells you is that we're seeing richer and richer people, bigger amounts of middle class demanding a different type of product. And that can be seen in this slide too. It's a difficult slide to see at first glance, but effectively the middle and lower middle class are growing at the expense of the poor. So I just want to talk briefly on what demand looks like in different types of economies. China versus the US. Now you'll notice that China's in red, the US is in blue. Notice the US consumes a lot of beef. China, on the other hand, consumes a lot of commodity products. Copper is a huge portion, iron ore, soybeans for their swine herds. But that will change over time. So these basic requirements, these basic needs will slowly mature into higher-end products. And this has a huge impact for South Africa. But before I get there, I just want to also say that China's own GDP will be at question in the years ahead. And no, not everyone's going to agree with me, but the transition that they've got to make is enormous. And I'll explain it to you like this. For 30 years, they've grown the economy at 10% a year. They've doubled the size of the economy every 7 to 8 years. So they're the biggest consumers of copper, as we've shown, you name it, nickel, iron ore, etc. But most of that growth has come from construction, mainly property. Now, you need your population to grow to keep on demanding property. So if you're growing off that kind of base, that requirement, it doesn't help when your population goes from 1.4 billion to 700 million. So they've got big questions, and exactly why China's trying to move the consumption pattern away from construction to more consumer goods, services, etc. All right. The last slide here really is all around South Africa. And I just want to quickly give you an indication of who we sell to. So China is $12 billion a year of exports. The US is 11. It's 9%. Germany's 10, Japan's 9, and the UK is 6. So those are our 5 biggest exporters. We export $123 billion of products around the world. In the top 25, we don't see Russia, just by the way. Nowhere to be seen. So the ramifications for South Africa of the demographic transition is that we have to acknowledge that some of these products are going to become less important, and we have to drive ourselves to create the products that are going to become more important for a larger middle class, and potentially we're not going to see another economy grow at the same rate as China has and the needs they've had over time. My final slide is on market cap. So what I've shown here is the market caps of the world's largest markets, the US, Europe, Japan's in there, China, and it reflects the demographic transition. If the sweet spot in the richest countries are happening, have created a population in the last 10, 20 years, they're benefiting from, the markets are benefiting from it now. But what about the next 20, 30, 40 years? As that transition takes place and aging occurs, there will be some pressure on those markets, as well as opportunities. And Hlelo will talk to medtech, the medical sector, and where there's opportunity for aging population in terms of the investment landscape. But I just want to leave you with this. The US stock market's market cap is 1.59 times the size of its GDP. Nigeria, which is going to have one of the largest populations on earth between 2050 and 2100, their market cap, size of their market, is 0.15 or 15% of their GDP. So insignificant relative to the US. And Ethiopia doesn't have a stock market, but is planning to launch one next year. And as I mentioned, 120 million people, 205 million by 2050, and just on 300 million by the year 2100. So we're in for a new age, a different time, and we have to prepare ourselves as investment professionals probably for a very different landscape. I'm just going to pass you over to Hlelo.
Am I going backwards or I'm going backwards? You need to go forward like this. Very good. All right. Good evening, ladies and gentlemen. So one of the opportunities we wanted to talk to you about, which is in the portfolio in our global equity fund, is Medtronic. Medtronic is a medical technology company out of the United States. It is $31 billion in revenue, located in 150 countries. And the greatest opportunity for growth that Adrian just spoke about is in the emerging markets. And you can see from this slide here that the penetration levels, in other words, the opportunity to use medical technology is still at its lowest in emerging markets, and it's at its highest in developed markets. So as populations expand in the emerging markets, as life expectancy also rises in emerging markets, but globally anyway, hopefully prosperity comes along with that, and therefore, and the ability to afford medical technology in emerging markets is really where growth is. So you really want to have the best of breed companies in the world that have the balance sheet to do so, pursue opportunities in emerging markets. So what's really fascinating to me here is that it's very difficult. It's very difficult to create a business out of something that comes out of your head. Sell it to someone and have it work perfectly and have it work with precision, as happens with medical technology. With medical technology is a high research and development industry. You have to register patents that have a certain amount of time, 20, 30 years. But competition is trying to out-innovate you. To innovate, it means to monetize your creativity. Now, what's really interesting with Medtronic is that it has the highest number of patents that are registered. They're constantly trying to figure out where the next big ailment comes from, what technologies to provide doctors with in order to help out with that. Medtronic has gross margins, 6 to 8%. The industry average, the industry median, the sector median, 35%. Metron has operating profits, operating profit margins, 19%. The industry median, 7%. Metron has free cash flow margins, 13%. The industry, -7%. Metron has an ROE today of about 8%. The industry, -40%. Industry median, -40%. There's some great companies in there and some not so great companies in there. But this is a pricing power. The profitability that you see in Metron that I've just described is a pricing power that comes out of deep research and development, registering patents, and having geographic diversification so that you're not really held hostage by one geography or one product. What is really fascinating to us here is that medical technology is also very defensive. It's not a highly cyclical industry such as the ones we have in this country, mining or banking or even IT. It moves along with GDP per capita. And the more medical technology or the more medical health is sought and the more complex medical operations people need, the more assured of usage and demand for medical technology products. So we look at it as a really safe place to not only invest in, grow, but not have the volatility that tends to come with the stock market. You can see on this chart here that one of the greatest areas of success for Metron is in cardiac rhythm. So anything to do with the heart and the heartbeat. They have great market share there. They lead the world at that. But there are other areas such as diabetes where they have insulin pumps and neurosurgery. You might know there's a machine called Da Vinci run by a company called Intuitive Surgical. Metron has its own. The level of innovation of the company, they have their own, which doctors are taken to, called Hlelo. So they're also growing in surgery, neurotic surgery, as well as neurology. But diabetes is a big area of focus for them, and that's really where emerging markets have significant amount of growth. Just want to say, Mr. Mayor, now that you're here, in terms of medical technology for cardiac rhythm, you may know, I think in 67, there's a gentleman, Chris Barnard, who had operated very successfully first open heart transplant. Do you know, probably that was the last time Cape Town contributed to scientific discovery. But there's a great opportunity to establish an ecosystem of medical technology here. We recommend you speak to these folks and have them come up and set up a plant here. You have great hospitals in the city. It's a great city of Cape Town. Everyone in the world loves it, I think. One of the really, really important points here is regulatory architecture in the world for healthcare. Obviously, one of the strongest regulatory architectures you find is the United States with the FDA, but it is an incredible barrier to entry. The best of breed regulatory architecture is the one that sets the bar for how well doctors all over the world and other governments all over the world take up medical technology. It's obviously extremely rigorous in the United States. It's rigorous in Europe. Metron does a great job of navigating that environment very well. And this is the reason why if you can get patents through the FDA, you can get less complaints from doctors, from patients. You can spread to 150 countries. This is the reason why you find MedTech or Metron having better margins, better profitability, better returns, and better growth opportunities than most companies that are situated and focused on just one market. So we recommend this company very highly. We hold it, and it's been a core holding, and we'll continue to enjoy holding it for longer. Let me hand over to Adrian to continue.
Thanks, Hlelo. Yep, we do own Medtronic, and we continue to like it. And Donovan, who's walking around somewhere in the audience earlier on, he's the analyst on that stock. There you are, right there, knows it inside out. So if you want to ask him any questions afterwards, just grab him. All right, the next part of the presentation really is the next threat is electricity. It's both a threat and an opportunity, believe it or not, if we get it right. I'm going to breeze through the slides very quickly. I'd like to start really with this presentation by saying I am not an energy expert. So there are energy experts here, and you'll know a lot more than I do. I'm not trying to claim that I'm going to solve South Africa's electricity problems. I'm purely going to tell you that what interested me was the load shedding we're experiencing in our family home every day. And I wondered, from an investment perspective, what does that mean for us as investors here for our clients? Is there any solution to the problem? And the more I delved into it, the more I understood the threat, but I also got to grips with the huge opportunity that exists. I'm just going to say one more thing before I go into the presentation. Think of one important point. Have any of you experienced South Africa's private sector failing on you? And I'd say the answer is generally not. We're great at education. We're great at health. Tell me what we don't do too well. Even aviation, we're good at. Even though we lose airlines every now and again, we're good at it. So we do everything relatively well. Financial services too. So keep that in mind if you're worried about South African electricity. We'll talk through that through the presentation. So I decided to start by adding Thomas Edison's little quote, "We will make electricity so cheap that only the rich will burn candles." Well, that's not actually true in South Africa. And against that, on the 4th of Jan 2023, we have a Boeing coming into the Western Cape and half of the cities in darkness, load shedding. In 1879, Edison created the first light bulb. By 1925, half of the homes in the US had electricity. So it took 46 years. In 1994, the ANC took over South Africa. 29 years later, all of our homes, at least 6 hours a day, do not have electricity. That's what we're facing. I'm not a politician, but that's the reality of the situation. So how does that get rectified? Some data on South Africa. In terms of power supply, 80-odd% of it is coal. There's some renewables in there, there's some solar, but it's basically a coal play. Get coal right, you get electricity right. If you look at growth in solar and concentrated solar panels and wind, it's been growing, but it hasn't been growing fast enough. Not fast enough to solve South Africa's problems. So we've been trying to grow alternative electricity supply, 0.5 gigawatts in 2013, 7 gigawatts now. It's just not nearly enough to deal with the problems we have. So what I did is I took a little chronology of South Africa's electricity since 1994, which I think might be of interest to you. Now I'm going to just highlight a few things. From 1961 to 1996, the old apartheid government created 15 power stations. They added 36 gigawatts of power to the grid. Now, I don't think any of us like the old apartheid government, but what they did do well is they built electricity power stations. 29 years later, the ANC government has added 9.5 gigawatts, 25% of what the apartheid government did. The problem we face, of course, is that they're assuming there's spare electricity, but there isn't when we actually start talking through the capacity problems that the system's got. But in 1994, there was 31% capacity in the electricity system in South Africa. And the ANC did the right thing. They didn't like the fact that only 54% of households had electricity in South Africa, and they're mostly white. It's unacceptable. So they did two things. They started to electrify homes at the extent of 500,000 homes a year, about 6 million people, because homes had a lot of children. And they forced Eskom to cut electricity costs. The problem is when you do both of those things and you don't give them money, you're going to run out at some point. So on this little schedule, 1998, a bunch of analysts went to the government and said, you need to create power stations. There's not going to be enough power in 2007. they only allowed the beginning of power station capex for Eskom in 2004. So they waited years. It was too long. In 2007, those analysts were spot on. Our first load shedding began in South Africa. And it was stage 2, if I remember correctly. We also started building power stations. Medupi started in 2007, and the expected completion date was 2012. The initial bill was 30 billion rand projected. Then it became 50 billion. Then it became 80 billion. Eskom they claim it's 135 billion finish, but it's not really. It's consistently breaking down, issues with it, and certain independent journalists have claimed that bill's closer to 200 billion if you add interest and stuff to it. But the point really is that the chronology just gets worse and worse. And I think the important ones are stage 6. It started in 2019, and critical was the change in the regulations of the Electricity Regulation Act in 2021, and I'm going to talk to that just now. But by the end of 2022, it was the most load shedding we've had in any year, 200 days of it. And in 2023, we went to what they describe as indefinite stage 6. So what is load shedding? Because I don't think I really understood it till I did this properly. Most of us think that when there's load shedding, the grid is under like terminal illness. But load shedding is demand management. It's effectively just turning off certain areas because there's too much demand. And that demand generally happens at peak moments, usually early in the morning when we turn our heaters on. And if I remember correctly, households are responsible for about 25% of consumption of electricity, and that peaks at certain periods. But the critical thing that I found is that at those peak moments, South Africa's demand for electricity is 34.7 gigawatts, a lot, relative to what Eskom can provide at those moments, which is 26.71. So there's a gap of 7 or 8 gigawatts of power. And that is the critical thing. There are enough power plants and stuff, but there isn't electricity at those specific moments. So they turn the grid off. They turn areas off to prevent the grid from effectively tripping. Why is this important? And why is it happening? Why is load shedding? And we just go back to the reasons. So I think the power grid was designed firstly for a white minority in apartheid, we like it or not. The ANC connected thousands of black households, which they should have done. Then there was risky demand, but it wasn't supported by capital expenditure. There was looting. Then there's a Soviet-style structure of Eskom. So you've got generation, transmission, and distribution, and no incentive to improve any of those areas. And then many South Africans refused to pay for electricity, and of course there's cadre deployment. So all of those things is a stew that created what we experience as load shedding today. And then what I did is I took a graph and I drew the extent of change in load shedding that we're experiencing too. And here's some points to note. In 2022, load shedding occurred in 43% of the hours of our lives. There are only 8,760 hours in a year, and all of us experience 3,773 hours of load shedding. In December of last year, there was more load shedding in that 1 month than any year previous to it. And that load shedding was stage 4 and no longer stage 2. So we changed not only the length of load shedding, but the intensity of it. And the problem probably lies to some extent here. It's the capacity factor. So there's this mix of potential areas that you can source electricity from. Solar, pump stations, wind, coal, nuclear, hydro. Notice that nuclear and hydro tend to have high capacity. You can access that electricity when you need to. It doesn't help when Kuberg's broken 2 of its units due to lack of maintenance and a life stage issue. But the problem is coal, which should be at 80 or 90%, is running under 60%. In fact, it's running at 51%. So that's really coal. You should be able to get it at any moment. Solar, you can't get it at any moment unless you've got batteries. So the problem we're facing is with new generation power needs batteries. You can't access it at all times. And the stuff that's been around for donkey's years that should be able to provide instant access to electricity isn't working. And that's reflected here. Eskom's energy availability factor of its fleet. 72% in 2018. Had they done something about electricity in 2017, it was at 75%. We should not have any load shedding today. But because they did nothing, we're now at 51% capacity. 51 available capacity. So here's some interesting points. Of the downtime, 30% is unplanned. Only 10% of it's planned. The rest of the time they're running around like headless chickens trying to fix problems because the thing's just tripping, and so it's unplanned. So the government's integrated resource plan came out in 2019 with lofty views of what this number. They think that capacity utilization or availability should be 75%. And here's the interesting part. That plan thinks that we need, I think, just short of 80 gigawatts of power in the year 2050. We're struggling to produce 26 or 27 gigawatts at the moment during peak hours. So the negative is that we've got real issues with decaying power stations. By the end of 2035, 9 of our coal power stations will be at the end of their useful lives. That's 19 gigawatts. And by 2050, 12 more, in total 12 power stations at 33 gigawatts will be no longer really usable. So they're going to have to keep these things going somehow. That is possible, but it's improbable the way they're behaving currently. De Ruyter thought that we would need 1.2 trillion rands to fix the problem by the year 2030. Other estimates are closer to 2 trillion. So that's the bad news. And here's the good news. All right, I don't have a slide on it. You're just going to have to follow me. There's action, and it's coming in the form of the private sector. That it does. All right, so part of the plan, Plan 1, is Eskom's doing its, getting quite a few of its current projects that have been going at it for quite a while back on stream. So they're fixing a few things and they're working quite hard at it. That should add 5 gigawatts to the system. And that's Kusile, Medupi, Kuberg. All of those things are coming back on if they get it right. And they look like they might get it right. Then Plan 2. There are 10 old power stations, 23 gigawatts. The private sector's dived in with 3 teams, all technical teams, to help Eskom. They put 100 million rand. I mean, that's like a drop in the ocean. But that's to keep paying salaries and that for their technical teams, to get out there and help fix those power stations. So that's the second part of the plan. That will make a big difference. If they get this right, within 2 years, there'll be stage 1 or 2 or no load shedding, if they get it right. Probably the biggest and most important change, though, is Plan 3, which can add 5 gigawatts a year. And that's legislative developments. So what you need is market liberalization, and there's stuff sitting with Parliament at the moment to try and do that. It's time out for me, so I've got to sit down. Thank you, Lily. There's public procurement programs, and all of these things working, if they allow the private sector to get involved, which is what they're trying to do now because they're being forced to do it, it will allow a producer of power to sell to a user of power over the grid, and the grid, hopefully, will be removed from generation over the next year as well. So you'll have 2 separate companies. So that's the process we're going through now. Potentially life-changing for South Africa's electricity, but we need the private sector to get involved and be incentivized. Thanks.
So this is the opportunity that arises from that, from the description that Adrian just took us through. If you look back in the last 5 years, companies that are exporters earn money in hard currency, whether dollars or euros, have performed phenomenally well. Companies that have seen their fortunes not being tied to domestic consumption, to domestic growth, but rather global growth and global consumption. That's on the left-hand side. You can see it's mining companies, rent hedges, whether it's in industrials or any other sector that manufactures and exports. But anything on the right-hand side of this chart where the consumer, like you and I, subject to whims of political risk, domestic policy mismanagement, and so on, that those sectors have really had it tough in the last 5 years. And I think it's more than 5 years, actually. I think it started in 2016 when this problem happened, when investors started to bifurcate between running away, running for the hills and picking up anything global and leaving everything that's domestic. So when you think about that, the difference in returns between domestic earners, rent earners, and dollar earners has led to differences in valuation. So naturally, you can expect that sectors, banks, retailers, for the most part, retailers have really been hit the hardest. That's really where the cheapness is. You can see the forward multiples have really compressed in domestic companies. Now, this is obviously very difficult for any one of us to internalize mentally because we're human beings. We get nervous. Adrian has just talked to us about how to solve the electricity problem. And South Africa doesn't have a how-to problem. It has an execution problem. As you know, we all have ideas. Some of us do a great job of peddling secondhand ideas. We're secondhand dealers of ideas. But we're third or fourth hand executors of even the worst ideas. So when you look at valuations that stick out like this domestically that are so cheap, and you say, what execution in the macro environment will happen? Well, you cannot pinpoint it. You cannot pinpoint it. The day you try to pinpoint it, when you see it, the valuations will have moved. So South Africa Inc. or domestic Inc. is really where the greatest opportunity for future valuations or future returns come from. Just to give an example of this is a company, Mr. Price, that is a complete domestic retailer of clothing. They do nothing else but purely discretionary items. And when you look at their share price, when you look at their multiple in red, and when you look at their return on equity in blue, still above 30%. If I told you a company has been hit terribly by a macro environment, but it still has a return on equity that's at 30%. Now, how is that possible? How is that possible that in a sea of negativity, you can still generate a return of 30%? Now, we know one thing as a law of investments is that as an investor, if you hold a company long enough, you will never get more of a return from it than it can get from the economy. So if it's getting 30% return from the economy and you hold it 5, 6, 7, 10 years, you can get a compound 30% return. Okay. So that's really where the opportunity in valuation comes from, is huge returns await those that are brave enough, but also thoughtful enough to pursue current opportunities or to make decisions within an environment of current fear. The next opportunity we have in the portfolio, Mr. Price is certainly one we hold in our portfolios. The next opportunity is FirstRand. FirstRand is simply the best banking franchise in the country. And it's not the best banking franchise in the country for any reason other than it does everything that other banks do. It does well. But I think many of you are holders of eBucks benefits. And eBucks benefits provide their consumers with tangible currency or rand benefits to go to the petrol station and use them to transact. Now, no other bank has a loyalty program as extensive and as liquid and as monetizable as eBucks. What that does, it provides FirstRand with something called switching costs, meaning that If you have to leave FirstRand to go to ABSA and you've been doing well with the e-bucks, you want ABSA to compensate you for that, won't you? Except ABSA won't do it. They'll put you into their little program, which is not nearly as monetizable as e-bucks is. So what do you end up doing? Not switching. You don't want the inconvenience, so you stick with FirstRand. And if you stick with FirstRand, benefiting from e-bucks, you then get an opportunity for FirstRand to sell you more than one product. And this is the reason why you see earnings at FirstRand continually growing. And you see dividends continually growing. And you find more interruptions, cyclical interruptions to other banks, to earnings of other banks and dividends of other banks than FirstRand's. So it's a great holding. It's one of our top holdings. It's a great opportunity for us. I think I want to pause here and probably get Adrian to, Lindy. Thanks. Thank you, ladies and gentlemen.
Thank you, Adrian, and thank you, Hlelo, for that interesting presentation. It's now time for our guest speaker, Mayor Geordin Hill-Lewis. But first, a little snippet of his extensive biography. Mayor Geordin Hill-Lewis attended Edgemead High School, after which he obtained an honours degree in politics, philosophy, and economics from UCT, and a master's in finance specialising in economic policy from London University. The mayor became politically active during his high school years. During his studies at the University of Cape Town, he founded the Democratic Alliance Students Organisation. He worked as Chief of Staff in the office of former Western Cape Premier Helen Zille. In 2011, he was elected as a Member of Parliament in the National Assembly, becoming the youngest MP at only 24 years old. During his time in the National Assembly, he has served on various portfolios, such as Trade and Industry and Finance, and most recently served as the Shadow Minister of Finance. On the 18th of November 2021, Mayor Geordin Hill-Lewis was inaugurated as the youngest mayor of the city of Cape Town. Geordin will now speak, after which we'll have time for a couple of questions. Thank you.
Well, good evening, ladies and gentlemen. I don't have a slideshow. Didn't know that was in vogue. So I'll put that over there. Next time I'll bring a slideshow. Thank you very much for the invitation, Adrian. I really appreciate it. It's great to join you, and I congratulate Northstar on the incredible growth trajectory you've achieved over the last couple of years. And nice to see all of you, ladies and gentlemen, fellow Capetonians. I had a whole speech here, but I'm actually going to put it aside completely because the topics that Adrian and Hlelo have been speaking about this evening interest me greatly and link very closely with what we are trying to do in Cape Town. So I just wrote a few notes of my own and want to just talk to those a little bit, and in so doing, talk about what we're trying to do in Cape Town. But first, I think it's important to note a key piece of economic data that came out earlier this afternoon. In the first quarter of 2023, South Africa's economy grew by 0.4%. Now, that was met with a lot of doom and gloom this afternoon in the kind of among economic commentators. I don't know how it was met in the boardroom of Northstar, but when I saw it, I thought that is frankly a miraculous result. It's absolutely miraculous. And it is testament to the unbelievable talent and ability of South Africa's businesses and entrepreneurs, that they managed to eke out 0.4% growth, facing the odds that they have faced in the first months of this year, I think is a remarkable result, and one that they should actually be extremely proud of, and all of us should be. And it just reminds me what the potential of South Africa's economy is, regardless of everything that government tries to put in the way of progress. Our entrepreneurs, our business people, our economy still finds a way to find opportunity, to find growth. And imagine what could be possible if we could just remove some of those big obstacles that are completely self-inflicted. If we could just remove the biggest one, which Adrian has spoken about, 0.4% could easily be 4.0%. Easily. And more if we could remove some of those other obstacles. So that makes me terribly excited about the future and how we can try to contribute to that in Cape Town, because that is exactly what we are trying to do. The other really cool topic that Adrian and Hlelo spoke about this evening is the issue of demographics. And that really spoke to my heart as an economist, because the number one pressure or kind of subterranean force that governments around the world ignore at their peril, and indeed companies and investors as well, are demographic trends. Because you cannot push against demographic trends. And that is both opportunity and threat for Cape Town. So while those developing country trends look very concerning, one of the things we are trying very deliberately to do in Cape Town is think in a really structured and scientific way about what Cape Town's demographic trends mean for the future of our city and how we prepare for them now. When I was elected, we put together a team that's in my office that reports to me called our future planning team. Because city governments are really good at doing responsive or reactive interventions, programs, but pretty bad actually at doing long-term proactive planning. We have a general idea, and if you speak to city engineers, they will be able to even produce some fairly good charts of where they think future services will need to be invested. But actually, if you scratch below the surface, there are some pretty flimsy demographic assumptions and not particularly data-rich planning going on behind the scenes. And so we have started a process in the city of trying to mature what long-term planning we do. Trying to look at exactly how many people are going to live in Cape Town, where in Cape Town they are going to live, what that's going to mean for people's lived experience, their communities, and what that means for our long-term infrastructure and budget planning. For example, earlier this year, we published for the first time an infrastructure report, which I'll say a little bit more about in a couple of minutes, setting out our 10-year infrastructure investment pipeline down to an area and project level. Because governments tend to work in 3-year cycles. In our government, we have a 3-year budget, and every year we update the outer year of that budget, and so we push the cycle out. But 3 years is just hopelessly inadequate for proper long-term planning. So we've published now a proper 10-year infrastructure plan for Cape Town, setting out 120 billion rands worth of basic infrastructure investment over the next decade. But we don't actually want to stop there. We want to see how can we plan for the next 20 years and 25 years. And ultimately our goal is to publish a 30-year infrastructure and service plan for the city, which doesn't just go into kind of esoteric thinking about the kind of nirvana we want in Cape Town in 30 years' time, but actually setting out in granular detail where investments need to happen and where they are going to happen, so that we can measure those against our annual plans and budgets. So demographics is a key part of our thinking. Our overarching sense of purpose, if you will, in Cape Town is to try and address 2 pressures. Firstly, it is that demographic pressure, the absolute knowledge that Cape Town will one day be a city of 10 million people. And if we arrive at that moment, or that moment arrives at us rather, and we've done nothing to prepare for it, then history will judge us very harshly. And Cape Town will be a much less pleasant and enjoyable place to live. But if we know that that is coming and prepare for it now every day, so that in 20 or 25 years when it is when it happens, when it arrives, that we have a city that is able to be even more functional, livable, and pleasant and attractive, then I think we will have done our jobs well. The second pressure we are trying to answer is the pressure that Adrian has elucidated, and that of an increasingly fragile national state that is putting pressure on a great deal of parts of our society. And we all feel it, whether it's the one we've just discussed or whether it be in crime or the fact that we can't send a postcard to our friends in New Zealand because the post office has also gone the same way. Whatever it is, we are trying to prepare for that pressure and make sure that we can protect our residents and protect our city against those pressures and answer them properly. And the most common objection to that is that, well, this has got nothing to do with local governments. Local governments, build speed bumps and tar roads and so on. And all of that is absolutely true, and we must continue to do that and do it well. But it would be, I think, unforgivable of us to simply sit on our hands and say, well, these things are too difficult and too sad for us to do anything about. And so we are just going to carry on sticking strictly to our knitting and not answer those challenges and answer those pressures. We, frankly, just refuse to do that. Wherever there is constitutional space for us to do something about those national government failures, we are going to try and move into that space and maximize that space. And the great thing about South Africa's constitution, young as it is that a great deal of it is still unexplored. It's like a kind of dark cave network where we have all lived in the brightly lit four-chamber for the last couple of decades, where we understand all that is around us. But there is still so much more beyond that is relatively unexplored. And we are trying to shine a torchlight into those unexplored places and chambers. Because we know that our constitution actually does allow for local governments to get involved in many more things than it has been the tradition to do over the last 29 years. So we are just trying to go through each of those pressure points. What are the things that make all of us, I have no doubt, speaking first and foremost as a South African and as a father, and those things that make us anxious about the future of our country. How can we answer those? How can we give people a sense of security that there is a way to deal with those things, that we can do something about it, that we can show that you don't have to simply accept, like our business people have shown today, in fact. You do not have to accept that these things spell only reversal for our country, that you still can achieve progress. So that is our sense of overarching mission and purpose. And really, if I were to pass out, you've kindly been given these notebooks on your table. If I were to ask you to turn to the first page and write down, what are those things? What are those things that as parents make you anxious? And with the greatest respect, some grandparents as well, I see in the room. The answers would all be the same. If we collected the books and I looked at your first pages, the answers would all be the same. And so we've just set about in trying in a disciplined way to address those things. The city for the longest time, and I think we, as many South Africans, we have to kind of put up our hands and say perhaps we were all, misled into believing that at some point soon Eskom would resolve this. Surely Eskom would resolve it soon. And I think the key shift that we had in 2021 was when we had that escalation to stage 6. We had it, as Adrian correctly showed, very briefly for a few days in 2019. What was it, 2 or 3 days? But we had never had it other than that time. But then all of a sudden, bang, it's on the scene in a big way. And in the city, we just realized our confidence levels that Eskom is going to resolve this are precisely zero. And perhaps in one point of difference with Adrian's presentation, that is still where our confidence levels are about Eskom's ability to resolve this. So we said we're going to set about doing this ourselves. And where I totally agree with your argument is that the most decisive factor will be the private sector, as it always is. But it will also be from activist local governments, cities in particular around the country, that actually say, we cannot possibly hope to maintain a local economic infrastructure, a local economic ecosystem. And so we have to do something about this ourselves. So we set about in February of 2022, just after our election in November 21, to buy 700 megawatts of power from independent power producers. And that procurement is basically done now. We are going through the phase of, which is a lengthy phase in government, of contracting with those suppliers and doing costs and price negotiations. Once those are signed, you have to go through the construction phase and get those projects delivered and then connected into the city's grid. But I have no doubt that over the coming 30 months or so, which is our very specific and carefully tracked on a daily basis timeline for the delivery of these projects onto our grid, we will be the first city in South Africa to protect residents and businesses from at least 4 stages of load shedding in our city at all times. And that's going to make a tremendous difference for our economy here. You look at how our economy is already outpacing the rest of the country, and you remove that massive roadblock of load shedding, and you can just imagine how that will alight activity and investment here. We've tried to increase the incentives for private businesses and private homes to invest in solar power systems. We're working on completely automating our applications process so that the application to get your system registered takes days at most. We have raised the incentive tariff that we pay, our feed-in tariff that we pay producers. And a very important milestone was reached today, important small beginning. Today we welcomed our first 40 wheelers onto the city's live wheeling pilot project, the first live wheeling pilot project in South Africa. That pilot project will run for the rest of the year, we think, until we're comfortable that we understand that it is working exactly as it should. And then we will open it up to whoever wants to join as a wheeler in Cape Town early next year. So in all of these things, we are trying to innovate, trying to make the policy decisions necessary to say we are not going to be subject to this failure. We're not going to simply put our hands under our laps and say we can't do anything about it. We are going to get up and do something about it because we want Cape Town, we want South Africa to work. We also said there's no way that we can do this without massive additional investment in infrastructure. And if there was one slide that I would have loved to been able to show you, it's one slide that I try to have with me at all times. A simple slide on infrastructure investment in South Africa, what economists call gross fixed capital formation. Gross fixed capital formation in South Africa is abysmally low today. Lower, in fact, on a real inflation-adjusted per capita basis than it was in 1962. So a great deal of what you see happening in Johannesburg, in Durban, in KZN, in other cities, where you see whole-scale infrastructure collapse. Yes, there's political reasons. Yes, there's corruption reasons. All of that is true. But actually, at the heart of it is a failure to invest, a failure to do the most basic task of government, which is to build infrastructure. And so we said we are not going to allow that failure ever to creep in Cape Town. While we've been investing over the last decades suitably, in fact, if you track our investment in Cape Town on a inflation adjusted, on a real basis, you'll see that our investment has in fact been growing over the last decade and a half. But here I come back to the critical point that Adrian makes. It has not been growing as fast as our city has been growing. In fact, we've been falling behind the demographic curve. And so we've instituted a new budget rule in Cape Town in the last year that forevermore, until someone changes the rule, hopefully they don't, that our infrastructure budget will grow by at least CPI plus Cape Town population growth. At least. They have to grow by that in order to keep up with the pressure. But in fact, in the short term to medium term, we're going way, way beyond that. We're growing our infrastructure budget by more than double between last year and next year. 100% growth in less than 2 years. Over the next 3 years, we're going to spend 43 billion on basic infrastructure in the city. To put that into perspective, that is more than the city of Johannesburg and the city of Durban combined over the next 3 years. In fact, it's more than Port Elizabeth, Buffalo City, which is East London, Tshwane, Ekurhuleni, and one other, Mangaung, Bloemfontein. More than 5 cities combined over the next 3 years. We will be spending on basic infrastructure in Cape Town. The vast majority of it going to water and sanitation infrastructure, water and sewage infrastructure, and overwhelmingly in the poorest parts of our city, which also happen to be the most rapidly densifying. Again, going back to the demographic trend. So you can see that intel, that intelligence, feeding through into real policy making at an infrastructure level. To prepare our city for another pressure, not entirely related to a national government failure, but not also entirely unrelated, and that is the pressure of water security, and to prepare for that incredible densification, particularly in poor communities, by providing proper, dignified sanitation and sewage infrastructure there. So huge acceleration in infrastructure investment. And the great thing is that we can actually do that. We have the muscle to do it. We're not going to borrow ourselves to the hilt. We are not already over indebted as so many of our other cities are. In fact, Cape Town has got 2.5% debt on our balance sheet, nearly completely debt free. And what is the consequence of that already? If you get into politics like I did because you want to see people get out of poverty and into job opportunities to have genuinely the concept of a better life, then there can be nothing more satisfying than seeing 4 straight quarters, as we have seen in Cape Town the last 4 quarters, of positive jobs growth. 279,000 new jobs in our city over the last 4 quarters. 40,000 in the last quarter. And in fact, in the quarter before that, 74% of all jobs in South Africa were created in the city of Cape Town in that quarter. Now, of course, the more astute observers or commentators among you will say, well, yes, most of that is COVID recovery. And of course, that is true. There has been an enormous COVID bounce back. But it was doubly satisfying in this last quarterly report from the Statistics South Africa Quarterly Labour Force Survey to see that we have now exceeded our 2019 employment levels. In other words, there are more people employed in Cape Town today than there have ever been, ever before in Cape Town. And we have now gone back into positive jobs growth territory. But we're not stopping there, just at infrastructure. We're also saying governments around the world, and so many governments in South Africa, including our own and President Ramaphosa in particular, have spoken so often about becoming a place genuinely more attractive to investment and an easier place to do business. But very seldom is that matched with real action. Lots of talk about red tape, quite a little action on red tape. I used to be a big fan of a product that the World Bank used to put out a few years ago called the Ease of Doing Business Index, the Global Ease of Doing Business Index. Unfortunately, in 2021, in fact, the year I was elected, the World Bank discontinued that index because they found that the numbers were being fiddled by the Chinese government. And so they cancelled it. But it was actually a great and very helpful product. And so we've said we are going to go out and recreate our own Ease of Doing Business Index so that we can be held publicly accountable. We publish the results of it on an annual basis. We've just published the first one a month ago. So that we can be held publicly accountable on an annual basis as to whether you, the business community in Cape Town, rates us as making progress on those items or not. Are we progressing or not? So we are serious about being an easier place to do business as well. One of those other national pressure points is public transport, another unfortunately collapsing state entity. In March, the Passenger Rail Authority of South Africa, called PRASA, released its annual report, its first annual report that it has released since COVID. And the results, we knew these results anecdotally, but to have them confirmed in writing was even more shocking than we could have expected. Because passenger numbers on South Africa's passenger rail network have collapsed by 97.5%, confirmed by PRASA. They now carry 2.5% of the passengers they used to carry 5 years ago. Not just in Cape Town, actually mainly in Gauteng. And if you've followed the business news the last few days, another division of that company, another division of Transnet, which is Transnet Freight Rail, also going through tremendous difficulty at the moment with the line. Was the Richards Bay line that's been in the news? No, it's the Joburg-Durban line that's been in the news the last few days, operating at 25% of capacity. So, again, we've said we could say, well, this is not our problem, it's PRASA's problem, you fix it. Or we can say, 10 million people, 25 years, we better start preparing now. And so we are advocating hard for what we call the devolution, devolving the passenger rail authority, management of passenger rail from the national to the local government. And in fact, if you go and look at your constitution, as I'm sure all of you do every night, you will see right there that in fact, we have all of the scope and ability to do this. It's right there in black and white. We've just never actually shone that torchlight into that unexplored cavern. So we are pushing hard to do that. And if you'd asked me when I was elected, what's the hardest fight you're going to fight, I would have said it's this one. It's going to be a long time before the government gives up its trains. But in fact, just like we've seen in energy, where eventually you have to come face to face with economic reality, just like we've seen in SAA, where eventually you have to come face to face with economic reality, as we are hopefully and all too belatedly seeing in the management of our harbors, you have to come face to face. So, we were quite surprised in March of last year to get a cabinet decision, a published cabinet decision from the national cabinet, that rail devolution must in fact happen to quote unquote capable metros. So we've been engaging in some kind of dancing, shall we say, over the last year to try and prove that we are a capable metro. I'm quite tempted to ask if we're not a capable metro. I'm not sure what the definition. I'm not saying we're getting everything right, not by a long shot, but surely we can have a go. And I think that there's a great deal of reluctance to hand over rail to Cape Town first, but I have no doubt that it is going to happen in the years ahead, that we will have the opportunity to manage passenger rail as well. And so too in the management of trying to secure personal safety for our residents, that must be front of mind for all of us as family people. We know and work daily with good men and women in the SAPS who do their best, but who struggle tremendously under a national management in an organization that is just not working and doesn't actually have their best interests and their safety as officers at heart. I work daily with and speak daily to officers who have to buy their own ammunition, that are sent out into some of the most dangerous places in Cape Town without bulletproof vests. They don't have enough stock. In fact, our officers in Cape Town, Metro Police officers, law enforcement officers, have to retrain and reprove their firearms competency every year. They have to requalify. SAPS has just moved their requalification criteria to every 5th year from 2 years previously, because they don't have enough training staff to do firearms competency. That is why you see thousands of SAPS firearms being lost around South Africa every year, and inevitably finding their way onto the streets, mostly of Cape Town. And we are taking them off the streets again in increasing numbers, using the technology and officers that we are deploying in ever-growing numbers in our city, taking on and filling more and more of that policing void, and doing more and more of that basic visible policing that people expect from the SAPS, but unfortunately which is not available anymore. And usually when I go in communities in Cape Town, I ask a simple question: who here in this hall ever would consider calling 10111 if you were in a condition of an emergency in Cape Town? Now, all of you would almost certainly call your armed response companies, but most people in Cape Town don't have armed response companies, and they call City of Cape Town's Metro Police Department. And so we increasingly respond to things which are not actually in our formal mandate. We respond to emergency calls, house break-ins, crimes in process. And actually the results are quite incredible. Again, one of those kind of goosebump moments in politics when you see what you're in it for is when crime statistics are released by the National Minister of Police, as they were late last week. We have done a deployment of our additional focused officers in 11 of the worst crime hotspots in the city. By the way, Cape Town has this really fascinating and quite unique phenomenon in that crime is extremely concentrated in just a few areas. The city is, by and large, spread across the city quite a safe place, but in about 10 or 11 precincts, crime is extremely high. And so we have deployed officers and technology to concentrate and flood and saturate in those areas. And 2 years ago, most of them would have appeared in the top 30 crime precincts in the country, and among the top in the world, in fact. Of those 11, 5 have formally fallen out of the top 30 precincts in South Africa and haven't appeared in that list again for more than a year now. But last week, we had the national crime statistics, which showed that every one of those 11 precincts, every one of them without exception, violent crime is going down in those precincts in Cape Town. Now, that's not to say it is safe enough there, far from it. We still have a long way to go. But it is showing again that you do not have to take these things for granted, that you can't do anything about them, these pressure points, these anxiety points, the things that you would and I would write in our notebooks. And that really is what we are trying to do in Cape Town. I could go on about so many other pressure points that we are trying to protect our city from and prepare for the future for. But that is what we are trying to do in Cape Town. We're trying to show we can be prepared for the demographic shifts. We can be prepared for all of the pressures that we face from all of these increasingly fragile national institutions. We do not have to accept that failure or reversal is inevitable and that we only have a reverse gear. We can actually show that progress is possible, that you can inch your way forward, that it is incredibly tough, as our entrepreneurs showed today. It is incredibly tough, and sometimes you have to really celebrate eking out 0.4% growth. But given the odds, that's a damn fine achievement. And that is exactly our mission in Cape Town, to show that our society still can move forward. So thank you for being wonderful Cape Townians.
Thank you very much, Jordan. We are under some time pressure, but we will still have questions. Would anyone like to pose a question to Jordan?
There was a notional time clock over there, which I just ignored.
I think everyone ignored it. Does anyone have a question?
Wheeling. It's what Adrian or Hlelo, I forget which one referred to it now. It is when you have a power generator inside the city's grid that sells to a third-party client, also inside the city's grid, using only the city's wire network, but entering into a contract between producer and client. So essentially taking Eskom and taking the city completely out of the picture, except for the use of our wires, for which we charge a small wheeling fee. And theoretically, let me give you a practical example, might help. If you're a property holding company and you've got a whole lot of big warehouses around the city, as they are, you could generate power at those warehouses, because warehouses generally use very little power on site, but they have huge roofs. So you could generate a whole lot of power at those warehouses. You could sell that power to third-party customers that you can go and find on your own in the city's grid, and we really have nothing to do with it except for providing the grid access, which we take a small margin for. That's wheeling. Yes. It's mainly a city competency, not only, but mainly a city competency. We have got to deal with the pressure of that in-migration into the city, most of which is informal, as you can see on the N7 past noon. So we've got to figure out a way to deliver much more affordable housing faster. And I can talk about how we're doing that in some really, I think, very exciting ways. But we're also going to have to come to terms with the fact that we are going to have to provide a place where people can settle informally, where they have basic services, and to do so in a more orderly and planned fashion, rather than just kind of unrestrained, as you see there. And we're going to have to do both of those things in tandem. Previously, again, it's been kind of one of those delusions that South African government has operated under, that you can eventually, if we try hard enough, we'll catch up with the housing demand through the delivery of formal housing. The fact is that we will not. We will not catch up with state-subsidized housing delivery compared to the pace of the growth in demand. So you will have to provide spaces in the city that are properly serviced. They have dignified services, but where there's no formal structures.
Thank you, Mayor. I think we've got time for one more question.
Sorry, Mayor, obviously very impressive to hear you talk. It's inspirational, but we talk is cheap and money buys the whiskey. I just want to make an observation. You're doing great things and stuff, but just some simple things. I live in Sea Point, Atlantic Seaboard, the biggest tourist attraction in Cape Town, aside from the castle, which I know you're dealing with, which is shocking. We walk past people urinating, defecating on the road, taking drugs.
Usually this is the first question I get.
No, I'm being serious. I'm giving you a suggestion. You have these policemen wearing blue uniforms and yellow uniforms, and they're employed by the City of Cape Town. All they do is play on their phones and look at Facebook. They walk past this. I'm just saying, I think you could utilize your resources a lot better if your teams were on the road and not busy at your rah-rah conferences and doing great things, which you are, but there's no feet on the ground. In any business, It only works because they're making things work. So my comment or my observation would be, we could do so much better. I see 10 people walking along, listening to a radio in police-type uniform on Seapoint Boulevard, walking over people taking drugs and having toilets on the road. How does that make any sense? So you've got the resources, maybe just drill them a bit harder, please. It would really help us.
So homelessness is usually the first question that I get, and I'm happy to get it every time because it's really an important opportunity to explain some of the strictures and limitations that we operate under in that space. In South Africa, the law says quite plainly there really is no two ways about this. Lots of people write to me every day saying, why don't you just remove those people? The law does not allow any person to be removed from any place in South Africa. It doesn't matter whether you've been there 10 minutes or 24 hours, unless you have an eviction order. So once that person has a structure erected, whether that be a formal structure or a plastic sheet, that person has to be evicted through a formal evictions process through the High Court. No, I hear that criticism. I'll come to that in a second. Yeah. I'll come to the police officers. But I do just want to make the point that we've spent the last year 253 million rand to try and expand alternative accommodation, shelter accommodation for those homeless people so that we can accommodate them somewhere off of the street, and most importantly so that we can show the court that we are taking seriously our responsibility, inferred responsibility. We don't actually think it's entirely our responsibility, but we're prepared to take it on because we've got to do something about the issue, to accommodate those people elsewhere so that we can get the eviction orders, which are in process, by the way, for the people living on the street in Sea Point. Now, we've deployed these police officers. They each have got a Epic device that's on their hip. It's a digital device that looks a bit like a cell phone, but it's actually not a cell phone. It's linked directly to our central control, our centralized dispatch, and it tracks their movements, exactly what they are doing all day long. If they stand too long, if they stand still or chill in their car for too long, it alerts their management. They get on the phone, they figure out what they're doing and where they are. It tells us on our centralized dispatch exactly what they are working on right now, whether they are doing vehicle patrols, traffic patrols, or whether they are doing generalized crime patrols. Obviously, it doesn't help us figure out if they are just walking past someone committing a crime like taking drugs or whatever the case is. And so we do have to ask you to please let us know if officers are just goofing off instead of doing their work. But from our side, we keep very careful watch on what they are doing through their Epic devices. We can even go and pull the details of exactly what officers have been on duty in Sea Point and exactly what they have done each day. We can show you a map of where they've walked. We track them and try and keep them on duty and on focus. It's a big organization, though. I can certainly not guarantee that all of our officers are paying maximum attention at all times. I've personally been in the control center where we send one of our drones over, and I can see our officers having a fat chat, sitting on their car bonnets under a tree somewhere. And then we get on the radio to them and say, hey, put away your lunchbox. And they can't believe that someone's watching them, because we actually are doing that. We're checking on them with drones and so on to see that they are doing the job that they're supposed to do. But you can't watch them all the time. So if you let us know when you see that happening, we will certainly take it up and make sure that they get some counseling on what they should be doing. Yes.
Odd million civil servants. That equals 20 odd million. Do we stand a chance with the moon shot?
Well, firstly, you'll think
Sorry,
that...
that's question one. I've got a question for Adrian. We've sat here, I've got it, that we must invest in Mediaronics and in F&B. I didn't really get the one about electricity. Is that we should be investing in Lion Match?
And wax businesses. There's a wax business, Wax Inc. The in electricity, renewable energy companies, the risk in electricity, Cape Town and South Africa right now is a little bit like Kimberley was in 1860. Everyone is diving into the renewable energy business, and a lot of them are shysters and fly-by-nights. So there's a lot of investment coming. There's a lot of magnificent growth to be had in that industry, but you also have to do your homework and be careful who you pick. Now, you will be amazed that people who receive, yes, the conventional wisdom and the word that's been put out there for a long time is that people will only vote for the ANC if they receive a social grant. Actually, that's not the case at all. There are hundreds of thousands of social grant recipients in Cape Town who vote for us. Also, actually, when you speak to social grant recipients and you ask them, do you feel cared for by the government, which is the most important emotion actually to test, the experience of social grant recipients in South Africa is actually terrible. Those social grant recipients get up at 3 a.m. They spend 40 or 50 rand on a taxi because all of the post offices are closing down. So there's no post office close to where they live. They spend 40 bucks on a taxi to go and wait in a line from 5 a.m. or 5:30 the whole day to receive their payment and then do the whole thing back home again. When you're receiving 1,800 rand a month for a pension, for state pension, or 1,940 rand, whatever it is, and you spend 100 rand of that just getting the pension, you don't feel cared for. That's not a very pleasant experience for you as a social grant recipient. And in contrast to that, we've actually been on the front lines fighting the post office to keep branches open, to try and keep branches open in poor communities, not because they receive the post, but frankly because that is a service site to receive the social grant. We've been offering our venues free of charge in community halls around the city's townships. Social grants are being distributed from those community halls because there are no post offices anymore. Now we hear that SASSA is going to start replacing it with a kind of electronic payment system through Checkers and ShopRite and so on. But still, the experience of social grant recipients in South Africa is actually very, very poor. And you should not, I think we easily assume that receiving a grant makes one loyal to the giver of the grant. Actually, if people feel that they are respected and cared for and seen, and that the living conditions that they live in are understood by the government, that is what makes people connect with the government and feel a sense of loyalty. And that certainly doesn't come from our current government. So to answer your broader question, I've long since learned not to make predictions in politics. There is no crystal ball. I think I will give you 4 brief scenarios that are in descending order of likelihood. I think it is still most likely that, and this is quite a remarkable thing to say, I would never have said this 15 years ago, but I think it's most likely that the ANC will just lose its majority next year. But just. And then they will probably cobble together a coalition with rats and mice parties who want nothing but what they can get out of it. They have no principled position on anything. They just go to the highest bidder. The second most likely scenario is that the ANC manages to scrape 50%. The third most likely scenario is where it gets really interesting, where the ANC's votes collapses so precipitously that it ends somewhere around 45% or below even. And that is not, that's not impossible if you look at, if we have another few months of stage 6 and so on. It's very possible. Then we really do live in an entirely new and fascinating country, because then coalition politics becomes very real. And it really is then all to play for. I don't know who will hold sway. I know that there's a core of people inside the ANC who would rather die than work with the EFF. And I speak to them often and try to cultivate those relationships as best as I can. There's of course another core inside the ANC that desperately wants to work with the EFF if push comes to shove. But I think there is at least a chance under that scenario 3 that a coalition pact could make it. And so it is. I know that politicians say this every election, but there is no doubt in my mind that this is the most fascinating election that we have had since 1994.
Yeah, thanks very much. Just, I think for everyone's sake, I'm going to ask a very quick, some quick questions. Just if you sat down with the president, what reforms would you request that he gets involved in? ASAP, just 3 of them. And then if young people are leaving the country and people are taking their businesses abroad, what would you say to them? And then my third question is just infrastructure. Is Cape Town going to put money into the grid in the Western Cape? Because, if we have failure elsewhere, can we manage a grid domestically?
So you're talking about grid access, grid capacity, or you mean just the general maintenance level?
I'm talking about adding to the grid.
Yeah.
The infrastructure that's required in the grid to keep it sustainable in the Western Cape. Is the Western Cape going to apply budget to that, considering the grid's actually an Eskom grid?
No, well, you see, in the city, it's our grid. We own the grid. It's our asset. And it is maintained to a much higher standard than the Eskom grid. And anyone who lives in an Eskom, or the people who live in an Eskom supply area, unfortunately, there's still about 25% of the city that is supplied by Eskom. And we're trying very hard to get those areas, to get Eskom to hand those areas over to us. But if you are unlucky enough to live in a Eskom supply zone, then you will know that the Eskom grid is maintained to a lower standard than the city's grid. And that's currently what we're arguing over, because they want us to buy their grid from them in the city, in those 25% nodes. They want us to buy the grid. And I'm saying, but we have no idea what we're buying. As far as I know, it's a rickety old claptrap. And we're going to have to upgrade it. We're going to have to spend billions to bring it up to our standard. So frankly, I don't think we should pay anything for it. So that's what the debate is about. So we are definitely putting massive amounts of money into our grid all the time. Basic maintenance, most of it basic maintenance and repair, and yes, a significant upgrade as well. Just to give you an idea, the Eskom capital investment in the parts of Cape Town that they manage, 25% of the city roughly, for this year is 83 million rand in their grid, so to speak. Our capital investment in our grid, the other 75% of the city, is 860 million rand this year. So it's exactly 10 times the size for a grid 3 times their size. So it puts it into perspective. So we'll carry on investing. I don't think that the Western Cape government will invest in Eskom's grid. That wouldn't be legal anyway under the Public Finance Management Act. I can't spend money on someone else's asset. So we won't invest in Eskom's grid. We'll just carry on making the case to take it over in the city. Then to people leaving the country, look, I will never begrudge someone leaving the country for safety concerns. I've got a young family, and those concerns are absolutely front of mind for me as well. I would encourage everyone to read the crime statistics carefully, and to read the book Factfulness. Who wrote Factfulness now? I forget now. But there are parts of Cape Town and parts of South Africa that are really very, very safe. But I don't begrudge anyone feeling seriously concerned about that. But for economic opportunity, I think there is still tremendous opportunity in our country. If you're trying to start a business in a economy that is way more mature than ours, and therefore by definition much more concentrated than ours, then you're going to be, whatever industry you choose, you're going to enter an industry with 1,000 competitors. Here you are building a business in a market with much fewer competitors. Yes, also true, fewer middle-class consumers, but hopefully we can grow that economy, and I think there's prospects to do that. So I think there's still tremendous opportunity in South Africa. I had the opportunity to meet this PE-born, now California-based billionaire called Patrick Soon-Shiong. He built this manufacturing plant, this medical manufacturing plant, not medical devices. Hlelo, you'll be pleased to hear. He built this place here in Brackenfell in Cape Town, and I had the opportunity. The president was there to open it, and I got a couple of minutes to chat to this guy. And I really I thought ahead of time what I wanted to ask him, and I thought I just want to ask him one question: why did he choose Cape Town? Hoping that he would say it's because of the brilliant local government, but that wasn't his answer. It wasn't his answer. His answer was instant. He said, "Oh, that's easy. You've got 4 world-class universities in one city, and you've got the best skills pipeline that you can hope for if you're trying to build a technology business in Africa. There's only one place that you would want to do it, and that's Cape Town." So I think there's still huge opportunity. If people like that are saying that, then there's still big opportunity in Cape Town. Then if I had the chance to speak to the president, I've had the chance on and off a few times. I would say to him, put aside everything else and make your presidency about 2 things only: electricity and trains. His presidency is at sea at the moment. There is no direction to it. There's no clear strategy. It's just lurching from crisis to crisis. And he doesn't feel like he doesn't evince the characteristics of someone in control. And so I would say you should bring absolutely ruthless focus to your presidency. Say that there are 2 things above all else that are killing the South African economy, and that is our electricity crisis and the state of our rail network, both passenger and freight. And I'm going to do that every single day, almost to the exclusion of everything else, until we show some progress on those 2 things. And I think there would be a million people moaning about you're not dealing with this, and there would be lots of legitimate other things to deal with. But if we just got progress on those 2 things, we would grow this economy probably an order of magnitude bigger than what we managed to do today.
Thank you very much, Mayor. I think we all found that. I'm sure everyone found that very inspirational, and the city's in very, very good hands. We know that, and if we compare it to the rest of the cities around the country, if you travel, it's patently obvious that we live in the right place. So thank you again, and we really appreciate your time tonight. Thank you to all our clients. We're sorry we kept you a bit later than we wanted to, but hopefully you found it a very interesting evening, and you're welcome to get a drink if you like, and drive safely home. Thank you so much.
you.